and we will pretty much be talking about 4 items. But before I start talking about the 4 items that we will talk about, I'm going to give you an overview of what a deduction and what a credit is. So usually when you talk about taxes, a credit is something that's applied directly to your tax liability. So for example, if you make $100,000 a year and you're taxed on 35%, which means you have to pay $35,000 of taxes, getting a credit of $5,000 means you're going to end up paying only $30,000 of taxes. So a credit is applied directly to your tax liability, whereas a deduction is applied directly to your taxable income. So for students like us, for students like myself, there are 4 things that are available for you to make sure that you take that into benefit before you graduate. The very first item that's available to you it's the lifetime earning credit. And with the lifetime earning credit, hold on, let me roll to the slide. Okay, so with the lifetime earning credit, if you spend about $10,000 in expenses per year, qualified expenses, qualified student expenses, you're able to deduct about 20% max of those $10,000 on your return, which means if at the end of the year you have a tax liability of $5,000, you have $2,000 given to you as credit. So this is something that you guys can definitely take advantage of if you receive any kind of loans or you pay directly out of pocket your education. With that being said, the credit is non-refundable, so you can only be able to offset your tax liability against the credit. It's not something that you can ask for the IRS to send you a check for. So if you ever pay out of your pocket any money for your education or you take loans out, I would advise you to look into taking advantage of this credit here. It's just there for you to be used up, so it will help you. And I was going to move forward without mentioning that this is pretty much for someone like myself. I come from a low-income background family, so I know that my dad especially, wasn't able to make the $62,000 per year. And if you make more than $62,000 per year, you are not eligible to be able to take the credit or the deduction. So long as you're a student and you make less than $62,000 a year as a single tax filer, you're able to take that deduction. If you have anything over that, then the $2,000 credit allocated to you starts phasing out. And I almost forgot, there are 3 main criteria that you have to fulfill in order for you to be able to take the deduction. First, as the screen says, you need to have no felony drug convictions. And this is something that you can take whether you're a freshman. Throughout your college years, you can take this credit deduction. That's pretty much it. Now, we have a second type of deduction, and this is pretty much related to your tuition and fees expenses. You have up to $4,000 in deduction throughout your 4 years in college for any monies that you pay out directly related to whether it be your books. I don't think room and board are included. They are not included. Has to be your books, your courses, and anything that helps you pretty much in class. Now that we're talking about this, I'm going to give a quick example about myself. Since I'm graduating this semester, this year I actually took this deduction into account on my tax return. So you are allowed up to $4,000, but you can, in some instances, pay or deduct more than $4,000. The scenario will have to be if, for example, I'm a taxation major and I'm doing an MS in taxation, I usually have the $4,000 available for me to deduct. But anything that I paid over that, I can take that as a deduction based on the fact that it's a business expense. So if it's anything that increases your craft or it helps you sharpen your professional craft, you can always take it. For example, this year I think I had, it's personal, but I don't care sharing it since it's going to help whoever is going to use it. I had about $11,000 in tuition and fees expense. So my regular threshold was 4,000, but the other 7,000 I did take them because it's a master's in taxation. I'm a tax accountant. I'm a CPA, and it just, the schooling just furthers my craft. So you can take it as a deduction because it's pretty much your trade or business, if that makes sense. Maybe I'm going too fast. Does anyone have any question? Does anyone? Oh, okay, yeah, thank you. Well, um, and again, all of us who are here in the room, we have one common relation. It's our income threshold. And this type of deduction, the $4,000 is, it phases out. So once you get what the U.S. Census of Bureau will call standard of living that are above average, if you make above $80,000 a year, then you can't take this deduction. If you make, I'm sorry, I'm going to correct that. If you make $80,000 as a single filer, you can't take the deduction. And as a joint filing couple, if you make above $160,000, you can't take the deduction. So, yeah. Well, maybe I should spend time talking about the criteria. The student must be enrolled, obviously, in college, have a high school or a GED, and you need to take one or more courses per semester. As opposed to the lifetime opportunity credit, learning opportunity credit, for this one here, you have no restrictions, whether it be related to drug felony convictions or your number of years in school. So if you're here for 20 years, every single year you can always take the deduction. Every single year you can always go to school. So before I get to this phase of the presentation, I'm going to scroll back up because I forgot something. I apologize because I'm in a rush. Actually, why am I talking about my personal life? But anyway, I'm traveling very soon, so things are very hectic for me, but bear with me, please. There you go. So this is the third credit or deduction that you are allowed to take while in college. And it is briefly abbreviated AOTC. Pretty much the first $2,000 of qualified expenses that you incur per year are deductible. And then 25% of the next $2,000 that you spend related to qualified school expenses are deductible. So you get a total of $2,500 in deduction. Actually, I'm going to correct myself, in credit. You get $2,500 in credit available to you. And unlike the lifetime learning opportunity tax credit, for this type of credit, you actually can ask the IRS to give you a refund. And I believe the refund is up to 40%. So in a year, if you have taken or paid $6,000 in qualified expenses, you are allowed to take up to $2,500 in credit. But if you didn't make any income, if you didn't work, if you didn't have any other income, you can ask the IRS on your tax return at the year end to refund you up to $1,000 of those credit. So, yeah. The credit phases out, I believe, for single tax filers when you reach $80,000 of AGI and 160, which is double the amount for couples. And another criteria about this credit that's different from other credits or deduction is the fact that here you must spend this amount on your books and on I think it's books, tuition and fees, courses related expenses. So buying a laptop wouldn't be advisable, or buying registering for the gym here at school, which ultimately helps you be healthy, which ultimately helps you do better in class, which ultimately helps you graduate better and get better grades, which I think should be deductible, wouldn't be qualified under these kind of expenses. So anything that you pay out of your pocket that has to do with your books should first be allocated to this credit substantiation. So as I mentioned earlier, when it comes to the AOTC credit, there are certain types of expenses that we usually pay for, especially if you live away from the house and you live on campus and you live away from parents. You pay for thinking that, okay, all of these expenses are related to my schooling, so these should be deductible, or I should be able to get a credit because these are related to my schooling. Well, the IRS doesn't allow all of these to be deductible. For example, if you pay for school insurance, whether it be medical insurance or some kind of restoration insurance, you won't be able to use that expense as a way to claim the AOTC credit. If you pay for medical expenses, let's say you're on campus and you get hurt, you run, you fall, and you don't work, maybe you don't have any insurance, these expenses won't be taken into account when you will be trying to claim your credit related to the AOTC. Any amount that you pay having to do with rent is not deductible, or you can't claim that as a deduction related to the credit. Transportation, personal living expenses, sports, games, hobbies, and whatever follows after will not fall under the type of expenses that will give rise to the claiming of the AOTC credit. We also need to pay in mind that as students, if we take a credit, well, you can't double take a credit. So you're only allowed to take one credit. What do I mean by that? Per year, you have the choice to choose in between. Well, you should be able to analyze and know which one out of the two credits will give you the best tax advantage. So you have the AOTC and you have the LOTC credits. So you can't deduct the AOTC and the LOTC. The advice that I can give to students, since for the most part, staying in school is also about having some kind of financial stability. Is in years where you didn't work or where you didn't make enough income, I would advise you to claim the AOTC. Why do I say that? It's because you have up to $2,500 in credit that you can receive. And in the years where you haven't made any income, what you can do to maybe supply yourself with an extra $1,000 during the summer is you claim the credit, but you let the IRS know on your return that you won't be able to use the credit because you have no income to offset it against, but that you actually want a refund of $1,000. I think that refund can go a long way during the summer for students. So that's one tip. For the LOTC, under which the first $10,000 of qualified expenses that you have give rise to about 20% or $2,000 of credit. What you can use this credit for, you can use that in years where you actually have income or you actually have something to pay to the IRS. Pay in mind also that if, for example, you have $700, $500, $1,000 in liability at the end of the year, and you choose to use the refund, the mere fact that you have $2,000 in credit doesn't mean that the IRS is going to refund you $1,000. They would only offset that $1,000 of tax liability against the $1,000 of credit that you will get from your LOTC credit. Now, you can combine both in a sense where if you have more than $10,000 in qualified expenses, what you can do is the first $4,000 of your expenses, $2,000 out of that first $4,000 is directly allocated as credit to you. $500, which is 1/4 of the second $2,000, is directly allocated to you as credit. Now, anything over the rest of the $6,000, I would advise you to spend the rest of the $6,000 on anything, any other kind of expense, whether it be laptop, whether it be, I don't know, anything that's related to school. But your first $4,000 of expense, I would advise you to make sure that you spend it on books and on tuition and fees, because the criteria for your American Opportunity Tax Credit Act is that the first $4,000 of qualified expense have to be related to tuitions, expenses, and to your books. Now, the next $6,000, like I said, can be related to anything, laptops, insurance, and whatnot. So, yeah. Now, I'm going to reiterate on who qualifies for the AOTC. I mean, most of us here are undergraduate students and we're getting our bachelor's, so we already pre-qualify for it. You have to be enrolled in half-time. You have to be enrolled as a half-time type student for a year, any year after 2012, and not have felony drug conviction on record. So this table is just a summary of what I've been explaining. For the AOTC, you can claim credit of up to $2,500, and 40% of the $2,500, which is $1,000, can be refunded by the IRS in case you have no income to offset the credit against or the tax liability against. The second one, which is the lifetime learning credit, you have up to $2,000 of credit that you can earn on any $10,000 expenses incurred in school. Pay in mind, for the lifetime learning credit, your expenses don't forcibly have to be related to books, tuitions, and fees. They can be related to anything that is related to your schooling expenses. The $2,000 are non-refundable, so it's best advised to use them in years when you actually worked and you had some liabilities to pay to the IRS. And going back to the deduction, which is different from the credit, you can deduct up to $4,000 of qualified expenses per year. But the tip that I added on it, based on my situation this year, is that if I'm a medical student and I'm going to go to medical school and I'm in medical school and I pay more than $4,000 per semester out of pocket, I can always deduct the first $4,000 as this kind of deduction, but anything over it, I can deduct it as a business expense because it technically enhances your craft. So that's one tip that you can take from this today. So again, this table sums up the qualifications for you to be able to take either the credits or the deductions. So for the AOTC, you have course-related books, supplies, and equipment. And for the learning lifetime, or the lifetime learning credit, this is so confusing. No criteria whatsoever. As long as you spend money going towards your schooling expenses, you're fine. And the same goes for the tuition and fee deductions. Now, in order for you to be able to take these expenses, we also have to make sure that the right person is taking the right kind of deductions or credits. So you can take these credits, or you've earned these credits if you pay for your own schooling expenses, if you pay for your spouse schooling expenses, if you pay for dependent expenses, or a third party. For example, you can lock in some amount of money at a bank. Maybe let's say today you gained the lottery and you want to make sure that your children get education for maybe the next 20 years. Well, let's not say 20 years because I don't think anyone wants to be in school for 20 years, but let's say for your 6 years in college, first 4 years undergraduate years and 2 years of masters, you can lock that amount of money with a third party, which usually is a bank, in an escrow account, and you pretty much tell them that when my son turns 18 or he turns such and such age, I want you to take some money out, pay whatever university would have admitted my son in school, and these expenses will pretty much be deductible to you. Not in the year when you lock in the money, but in the year when the payments are actually made. So, and this applies also for the lifetime learning credit requirements in order for someone to be able to earn that credit. As far as the tuition and fees, it's only yourself or your spouse. So what type of education qualifies under the AOTC credit, the LLC credit, and the tuition and fees deduction? So for the AOTC, I think it's your first 4 years after high school in college. And the institution has to be I forgot what the word was for it, qualified institution. There you go. So it's a four-year university or community college institution. So, and for the lifetime learning credit, well, the name itself tells you for how long you can take the deduction. So for however long you're alive and for however long you feel like going to school, you can have the credit. It's there for you to use. Tuitions only applies to undergraduate and graduate school. And I'm going to go very quickly over the income brackets that you cannot surpass in order for you to take the credits or the deductions. So it's $80,000 to $90,000 when it comes to the AOTC when you're single or head of household. It's $160,000 to $180,000 when you're married filing jointly. $52,000 to $62,000 when you're single or head of household when it comes to the lifetime learning credit. 104 and 124 when you are married and filing jointly. If you notice, the income brackets just multiply themselves when you look at the difference between someone who is single, the threshold, and someone who is married filing jointly. It's just doubling up the numbers. And lastly, for the tuition and fee deduction, it's from $65,000 to $80,000 for single and head of household, and then 130 and 160 for married filing jointly. Here are the forms. 8863 Part 1, 3, and 4. 8863 Part 2 and 4. And then Form 4917. In case any of you didn't get any of what I said today, the next slides will help you, hopefully. So, I'm sorry. We have the EITC website available for everyone to visit if they ever want to make sure that they are allowed to take certain credits in certain years or deductions in certain years. This is a display of the beautiful IRS website set up for you guys. And that's a page that lets you know whether you're eligible to take an education credit. With this being said, thank you very much for your time. I hope I was helpful in letting you know what kind of credits and deductions are available to you. I surely do hope you guys take advantage of it, because when I was in college, I didn't know this up until when I started working and I started my master's. So make sure you take advantage of it. Have a nice day, guys, and have a nice semester. Good continuation whenever, in whatever degree you guys are having. Thank you. Bye-bye.